Trading is all about preparation. What are the kinds of things that I can do every day that means that I'm going to be in the right frame of mind and looking at the right places of the chart so that when a trade sets up, I'm ready to take advantage of it as opposed to seeing it 15 minutes after it's formed. Hi everyone, my name's Tim Fairweather, and in this video, I'm going to show a simple daily practice drill that you can do before the session that I think is going to help you to become a better trader. Now, this video is part of a daily review series where I reference my past videos and show you how to apply those drills each day so that you can practice. The purpose of these drills is for them to be very simple so that you can get a lot of repetitions. And if you practice them every day, what's going to happen is that when you look at the charts, you're naturally going to see things without having to look for them. And this is going to help you position yourself on the higher probability side of the market, which is where we want to be. I've also got a playlist set up on YouTube, which you can click through, and I'll do my best to provide links so that if there's a particular drill you haven't seen, you're welcome to click that and find that video. So let's kick off with yesterday's price action. So I'm going to go through the drills that would have been helpful to practice before the session opened, which would allow you to take advantage of those trades. So let's go and take a look. So here's the first video. Is yesterday a good signal bar, where I discussed this technique in detail. It's only 11 minutes long and it's something you can use every day. And it's one of the reasons that helped me become consistently profitable. Is yesterday a good signal bar? Yesterday is an inside bar. When I say yesterday, I'm referring to the session before. If I'm looking at that coming into the session, well, it's an inside bar. An inside bar has not broken out above the high and it hasn't broken out above the low. So it is a pause. It is a shrinking of volatility. And that means it's a form of breakout mode. You can see here is an inside bar. We shot out the top and then came back down into it. And then we broke out. Here is an inside bar. We went above, we went below, and then we left. Here is an inside bar. We broke out, and then we came back nearly all the way to test it again. So today is an inside bar. So what are the expectations? Well, we might go above the high, and we might go above the low in one day. What are the other options? Here is a bull spike in a bull channel. We've had one sell-off attempt. This is a second sell-off attempt, but we haven't gone below that bar. And the market might need to go below there to see what's there. If I'm a bull and I'm flat on the daily chart, I don't really want to buy the close and I don't really want to buy above that bar. So going into yesterday's price action, I was expecting price to go and visit below that bar. And we can see what happened yesterday. A lot of other traders thought the same way, that it was better to go and visit below that bar than go directly above. So that's how you could have used that video. Was yesterday a good signal bar, in order to position yourself to the short side. So even if you were long in the middle of this range on the open, by the time that first hour closes, you're starting to get the first indication that we might need to go below that bar. Can you sell below 12? I think you've got to wait for the follow through bar, 13, bear close outside the range. I think traders sold 13 or 14 or below either of those bars for a measured move down. So I've got the circle that I just drew on the daily chart. We wanted to go and visit below yesterday's low. And you can see when we opened the session, it was a tight trading range. And it's easy to get stuck in here unless you think about the higher time frame picture, which says we might need to go below that bar. I've now added the low of the day before and the low of the day before that. So if you were caught in the middle of this trading range long, expecting it to go up, by the time you see 2 or 3 bear bars, it's time to realize the market's going to be doing what you expected on the higher time frame. 3 big bear bars closing on their lows. Some traders will sell that. I think it's better for traders to sell the follow through, because now you've got 2 closes outside of that range. And you've also got closes below that swing point for the bulls. Now those bulls are stuck. So by doing this drill earlier, you had a chance to position yourself for a measured move down. Some traders will use that small range, betting we're going to close at yesterday's low. That was actually my first target yesterday. Other traders might sell the close or below that bar for their targets. So I think practicing that drill before the session and getting really, really comfortable practicing this drill with the daily chart in mind is going to help you capture those opening range breakouts and early swings. Let's go to the next video. Coming into the session, there were a couple of places for a swing stop. If you're a bull, you've got a new high. So traders might put their stop. That's one possibility, but it's a bear bar, not a bull bar. I think it made more sense for bulls to look at this area. So in the video, I discuss are 60-minute signal bars live. Here is a strong bull signal bar. I'm in a bull channel. Here's a bull signal bar above the moving average. It's closing on its high. There's a good chance we're going to go and test the high. A trader can buy the close. A trader can also buy on a stop one tick above that bar, and their stop is below the swing point. If I measure from that swing point to a new high, those traders did not have a chance to exit that trade. There was a chance for them to take one-to-one exiting at the top of that channel, which was a good idea because there were a lot of bear bars. But also, this is a reasonable entry for a swing, and traders might have been holding for more. And what happened in the session? Well, that signal bar, in my view, was important. If I bought there and put a stop down here, which made sense because we're going down, first pullback, inside bar, inside bar, bull breakout above. That's now a higher low. That's my entry point. And we did not run the stop of that signal bar. And because we didn't trap those bulls, they're still in a long position. That's looking at it on the bull side. What about the bear point of view? Well, coming into yesterday's session, if a trader sold the close of that bear bar, coming into the start of the session, they had not been stopped out of their trade. They put a stop above that bar, and in fact, they had another chance, rather than selling the close of that bear bar in a bull channel, to sell a 50% pullback. So the traders that sold 50% have got a target down there, and the traders that sold the close have got a target there, and they would really like to get a 2R target. So before we were looking at the bull swing entries down here, and now we've got the bull and the bear swing entries. Now, when we look at the chart, we see these bears who sold a 50% pullback with a stop above the high got 2-to-1 quite easily. We can also see bears that were looking for 1-to-1. Now, because they're trading the 60-minute chart, they're going to trade the 60-minute chart. They have not got a close on this bar until down here. At this point, they're expecting it to go down here. The market reverses strongly on this 60-minute bar. And what do? When it comes back to their entry, they exit. And you can see that's where those bears exited. So if you saw this signal bar before the session and you knew that those traders were still in a short, then you knew the target for that short was also below the lows of the past couple of days, which is what I showed before. If you missed that sell down there, that's okay. Now that we're reversing strongly here, you can say, those bears are probably going to get out of that trade. This is a strong bull bar in a bull channel. It's no longer very clear that we're going to go down here. We're probably going to go back to the moving average. So you had a chance to buy here and trade back to the 60-minute moving average. So that's how you could have used that video and that drill before the session to position yourself for some of the targets on the 60-minute chart. Let's go to the next video. So in this video, I talk about higher time frame, lower time frame practice drills. Whatever pattern you're looking at on this time frame, you go up and you'll find a faster version of that pattern. If I'm in a bull channel on this time frame and I go up, I'm going to find a small pullback bull trend or a bull micro channel. If I'm looking at a bull micro channel on this trend and I go up a time frame, I'm going to find a bull breakout. And this is in reference to Dr. Al Brooks's slide here. So how could we have used this drill before the session to have an idea on some expectations to capture those swing trades? I'm using market replay again, and just to confirm that I understand what's happening on a higher time frame, you can see this is a bull channel. Traders are buying high 1 pullbacks and high 2 pullbacks. So bull breakout, pause, buy signal, pullback again, another buy signal, high 2, breakout, pause, another buy signal, breakout, strong move down. First buy signal is probably going to fail. Second buy signal will probably work. High 2, new high, pullback, high 1, pullback, probably a high 2 buy signal. This is a bull channel. So what do we expect to see on the lower time frame? A broad bull channel. And if we squeeze this chart here, we can see exactly that. In a broad bull channel, the market has moments of always in long and always in short. And the market creates a lot of wedge pullbacks to a higher time frame. Now, we're not going to create high 2s forever. At some point, we're going to transition into a trading range. The trading range is probably this. This was the last spike. If this collapses, we need to go and break any possible swing points here and somewhere down here. On the high time frame, this is also a bull channel. And if we go below and break that trend line, we're probably going to come back and test that area. And you can see the higher time frame gave us an idea of what to expect on the lower time frame. Traders didn't buy the moving average anymore. We failed, ran a swing point, came down into the lower third of this trading range, and then went back to test the breakout point. You can see why I recommend practicing this drill a lot. It's providing you the ability to set up a number of different trades. If you were looking at a buy signal in here, because a higher time frame bull channel, you would have got stopped. That's okay. Once you saw a number of bear bars, you knew the location for buying to appear again was somewhere down here, at least 20 points away. Once you saw a strong reversal down here, you knew the breakout point of this channel was up here. So it made sense to become a buyer somewhere in here, betting that we would go 10 to 20 points back up that way. So that's how you could have used that drill to set up possible swing trades. Now let's go to the next video. This video is called Where Are We Opening? So now we've already done our pre-market drills and the market's opened, and we're using that higher time frame analysis to get an expectation of where price is going to go. You can see the indicator has marked the high and low of yesterday. And if I use a fib tool to break that in thirds, you can see that we are opening right in the middle. So if this is a strong bull trend, traders really like 50% pullbacks. We go up, we pull back, and we go up there. But this is not a strong bull trend. You can see there's been very strong bear moves on the way down. This is more of a broad channel. And that means there's a couple of different locations for the market to go and test. One is the bottom third down here. Another is anywhere in this range. Another is yesterday's low. On the bear side, they're doing the opposite. They see the important points to test are the top third, yesterday's high, and basically anywhere in this range between those two magnets. And so on the open, most traders were waiting to see which of these magnets we would go and hit. Here we've got a sell signal in that top third, but a lot of traders will wait for a second. We've gone up into the top third now, and we've created a strong sell signal. Now, if you see this and you're long, and you've got the higher time frame up here, you've got a reason to get out of that long. And if you're flat looking at shorts, you've got another reason to enter on the short side. We just went and tested the top third of a trading range. It's a second signal, and this one is closing on its low. There's a chance that you can swing down at least to test the bottom of this range. And in terms of a higher time frame pattern, selling there is probably going to result in a test down to yesterday's low or in that area. Now I'm showing this in hindsight, so we know it didn't form a buy signal there. But if you said, hey, Tim, what about the bulls that were waiting on this bar? Well, let's take a look. If you had this marked up on your chart beforehand, when we got to this bottom third, are you going to buy the close there? I don't think a lot of traders will. We've just got a new low of the day, and traders who day trade ES know that 11 points is not big enough for a day's range. So there's a really good chance we're going to measured move down or up a couple of times. So there's no reason to buy there. If you're going to buy anywhere, it's going to be at least a measured move down or more, and you're going to scale in. But why take on that risk? You've got 3 strong bear bars here. You'd be better off waiting for a confirmation or selling small and adding on. Now you've got a very strong bear spike. We've got magnets below. There's at least a 60% chance that we're going to go and test down here and further before running that stop. Hey, thanks very much for watching. I hope you found that valuable. What I did in this video was I used some of my higher time frame and preparation drills that you can practice before the session starts, which is going to help you mark up your charts and look at some key levels, which I think is going to help you capture the larger swings that are present on the day. I'll put a link to the playlist, and I'll put links to the videos that I discussed, and I highly recommend you practice those outside the session so that you have the confidence to follow your own analysis when it comes time to place a trade. Hey, thanks very much for watching. My name is Tim Fairweather from Zen Trading Tech, and I'll see you in the next video. Bye.